Hi guys. So the I know it's been a while since I uploaded a video here. Because of that, I've decided to actually unravel uh, some secrets that has to do with trading. If you are the type of person that is thinking of quitting forex, that you are the type of person that consistently lose money. So I've decided that I'm going to give you a detailed step-by-step guide on how to solve this problem. So I won't hold anything back because yeah, I won't hold anything back. So I want you to watch the video to the end so that you can learn the lesson which I'm about to expose, the secret I'm about to expose to you in this video. Okay, so and if this is your first time of coming across this video, I want you to subscribe to the video. And if you don't feel like subscribing, just like the video. It's fine. Okay, it's fine. Just try as much as possible to be kind enough to like the video to show some level of appreciation for my effort. It will really go a long way. All right. So please don't forget to subscribe because there are so many valuable information that I'm here to release, and I intend to keep releasing them gradually. So for you not to miss out on some of this valuable information, please subscribe, click the notification bell so that when I upload videos like that, you get to be notified. So without wasting much of your time, so let's start with it. So the thing is this, I'm going to still take you to my computer screen to show you certain things, because the issue with losing money as a trader or blowing your account has to do with a lot of things. It has to do with your psychology, it has to do with your risk management, it has to do with the way you do technical analysis. So let me start with the idea of technical analysis, then I will talk about the risk management aspect of it, then the psychology, how you have to deal with it. So talking about technical analysis, the reality is this: when you trade, when you analyze your chart, whenever you open your chart, you don't just consider looking at one direction. You have to look at both perspective of the market. You have to look at the market in both perspective, in both respect. The market is either go up or go down. It's either the market go up or go down, buy or sell. Those are the two options that are available in the market. So when you analyze the market, you want to be sure you don't just analyze it. You don't just analyze and then make conclusion that okay, the market is bullish, therefore you are going to buy. When you finish your analysis like that, and you've probably come to the conclusion that the market is in a bullish trend and you want to buy, before you press that buy button, stay back a little bit and then reconsider. Not reconsider, let me say, you have to now look at it at the other way around and now say, okay, let me analyze it and see if this market can actually go bearish. Okay, you've actually done your analysis and you've made that conclusion that the market is bullish. Probably the market is bullish truly, but you also have to sit back and reanalyze in this way. But when you are doing the analysis the second time, you want to see the possibility, you want to check the possibility of the market going bearish. This way, you may be exposed to certain information during your analysis that you might have missed. So when you see this kind of thing, you now want to weigh. Probably you now see something that gives you signal that this market might actually go bearish. Then you want to weigh the possibility of it going bullish to going bearish. If you see that the possibility of it going bullish outweighs the possibility of it going bearish, that is when you want to buy. But when you realize that the possibility of it going bullish is is below the possibility of it going bearish, then you want to sell instead of buy. So you want to look at it from both angles. You don't just want to just analyze and then stick to that. You want to look at the market from both angles. So I will show you typical examples of what I'm talking about. Because some people, take for example, I'm still going to take you to my computer screen and show you this as I'll show you this practically. This is not just, I'm not just saying it. It's something that I've seen a lot of people making the mistakes. Okay, so now take for example, you have a market that is going on, that is going higher high, higher low, higher high. That is an uptrend. Then let me say the two last higher highs that was made. Okay, you are expecting that the market will trace it again before you take a buy because that is a bullish trend, obviously. Now, for so many people, we just expect the retracements to take place and then just check, is it at Fibonacci golden zone and all those kind of things, and then they will take their buy position. But you also have to consider that the two recent higher highs before the retracement you are expecting, you need to check if there is still momentum to the upside from there. Okay, these are some of the factors in a situation whereby, because sometimes you see higher high but then there is no momentum anymore to push the market to the upside. And I'm going to show you how to check all that. And hence, if there is a retracement and you decided to buy it, there is possibility the market will just move a little bit up and then smash back to your stop loss. I'm going to show you that in a moment, like I said. All right. So these are some of the things you want to also check the possibility of the market going bearish, even if you are seeing bullish markets. So that is the first thing you need to understand when it comes to technical analysis. And I believe if you can just master what I'm just this particular part of the video, what I've just explained, this particular part of trading, which is this technical analysis, looking at things from both angles, I want to tell you that it's going to significantly change or improve your trading knowledge or skills. Okay, so that is the first thing. So let me go to my computer screen now and show you this. Okay, so we are on my computer screen. There is something. This is what I want to actually show you. You see, when you analyze a chart, you want to look at it from both angles, just like I've explained earlier. Take for example, this is Euro USD now. If you look at this chart, it was in an uptrend before this 4 hour. I just want to use this to basically explain what I meant. So now this is an uptrend, right? Now it has changed to a bearish market, right? A bearish market. So ordinarily, now that you've identified that this is a bearish market now, ordinarily a lot of people will, ordinarily what you want to do is you want to sell the market, isn't it? You want to sell the market. So a lot of people will wait for this retracement to happen. Let me make this a bigger. Okay, a lot of people will make this we expect this retracement to happen and then short this trade. Okay, so that is what many people will look into. But the reality is, just like I've explained, even when you identify the trend and you intend to trade with the trend, you also have to check if there is another factor or another evidence that indicates that this market will not go in your direction. Now that, take for example, in this case now, you've identified that this market is bearish and you intend to sell. But at the same time, you need to ask yourself, okay, what about if this market is going to go by? Okay, now let me analyze and see if it's going to go by. I know a lot of people will just wonder, okay, what am I going to do to identify if this thing is going to go by? But I'm going to show you a secret here to identify if this market will continue this bearish movement or probably change to the buy, to change to or go into a bullish mode. Okay, so now that the market is making higher high, lower low, lower high, you've seen lower low, lower high, lower low, lower high, lower low. Okay, now lower high, so you expect another lower low, right? That is your expectation. But what I would advise you to do is that as soon as you have this retracement, before you take a sell position, you want to confirm if there is still momentum to the downside. That is the first thing you want to see, because now you want to sell, but at the same time you need to consider if there is still going to be selling opportunity to the downside. So despite the fact that the market is bearish doesn't mean that you should just go into sell mode. Okay, you also want to consider if the market is going to change the if the market doesn't have the ability to go into that sell position anymore. So in that case, what you want to do is you just have to check for what we call divergence here. Now you consider the two lows, the recent two lows that you have on your chart. If the case is uptrend, you want to consider the recent highs, right? So now these are the recent two lows. So all you just have to do is to check for divergence. Then you come here and mark out this divergence like this. So as you can see, now your market is showing you lower lows, lower high, but your momentum indicator is showing you higher high, higher low. That is what your momentum indicator is showing you. And this momentum indicator, like I used to tell people, it shows you the momentum, the power of people who are pushing the market at that period of time. At this period of time now, there are more. So at this point, more buyers are coming into this market. People are going bullish on this market compared to sell opportunity. So this is why, despite the fact that this is a bearish market now as it is, okay, despite the fact that this is a bearish market, you want to be careful. You don't want to trade the market. You don't want to go sell in this market, because this market may not go bearish anymore. So you want to consider, take a look at it when the market was here. Okay, let's say the market was here when you, well, let's say the market was here. Now, if you check this, you will see the market is doing what? Similar thing. Okay, the market is doing similar thing. Let me adjust this for you. Okay, you can see the market doing similar thing. All right, this is to tell you that there is still momentum to the downside. So in this case now, when you see a retracement like here, when you see a retracement just like it is here, when you see a retracement like this, what you want to do is you want to take a sell position. Okay, you want to take a sell position, and as you can see, the market actually shoot down afterwards. But in this case, that is no longer valid anymore. There is no momentum to the downside. That is why you need to be careful. So even when the market is showing you is in a bearish market, you don't just go in that direction. You want to see if there's anything proving you otherwise. Okay, so you want to consider. And as a matter of fact, if you look at this trade very well now, what the market is doing now, the market is making something that looks like double bottom here. Okay, so here it is. It's giving you something that looks like double bottom here. So if I were you, if you are not too, if it is not too obvious, you can change it to line chart to see what is actually going on here. So the market is actually showing you something that looks like double bottom here. The reason it doesn't touch like M very well is because this part is, I think, is a week. And let me check. Um, okay, yeah, you can see it actually touched very well. So this is something that this is double bottom basically. In fact, I might call it triple bottom because the market actually touched it here, rejected, touched it again, rejected, touched it the third time, and now what you want to hope for is a buy opportunity. And what you may have is this market might go. Oh, let me do this. This market might go up like this to this place, sorry, to this point, retrace to this point before finally going up like this. So in this case, will give you another head and shoulder, reverse head and shoulder pattern. So you just want to be careful. So you don't just analyze and just trade and just say, oh, the trend is bearish or bullish, and then you just trade in that direction. That is something you don't just do that. As even whenever you identify the trend, you also want to be sure that um, there is no other indicators that shows that the market may not continue in that direction anymore. So those are the things that you want to do. So with these little tips, you should be able to first of all check if the market is still going to continue in your direction. Let me give you another example before we continue with the main other thing. So if you look at this market now, this very one here, okay, this bullish movement here. So if you look at it very well, let me remove this. You will see that the market was actually showing you what I was talking about here. You can see the market was also making higher highs here, right? The market is also making higher highs here. So there is no problem here. So after this retracement, you may take a buy and the market will still go in your direction. As you can see, the market still go in your direction. At least this is going to be up to 50 pips if you are to enter the market after this candle close. Okay, that is 56 pips, I guess. Okay, that's 56 pips. So you can see that there, right there. But as soon as the market got here, okay, as soon as these recent two highs, as soon as we have them, the market direction, the momentum indicator actually change from there. Okay, this is not about divergence. This class is not about divergence. It's just about you exploring or checking before you just say, before you just trade trend blindly. Okay, that is just the idea. Now from here to this place now, the market is no longer, is already showing you momentum to the downside. So in this case, if retracement happen, you don't want to buy the retracement, because if you decide to buy the retracement, there may not be power, there may not be enough buying power to push that market to a high extreme. So the least that can happen if this doesn't happen, let's say the market retraces, what can happen is the market will just go here and then start coming down. Then in that case, it will form what we refer to as head and shoulder. And another thing that can happen is the market may come and make the same head here, so giving you what we refer to as double bottom, double tops rather. This is the first top, this is the second top, and it may turn from here, making reverse head and shoulder, sorry, head and shoulder pattern. This is the first shoulder head, the second shoulder, and what it actually formed now is what we refer to as head and shoulder pattern. This is the first shoulder head, this is the second shoulder here. So that is because there is no momentum here, so it's going to fail to make another higher high. So this is why it is important that whenever you identify your trend, you don't just follow the trend blindly. You want to check if that trend is still valid. Okay, so these are some of the things you need to incorporate into your full strategy, full analysis. I have intention of doing a top-down analysis, incorporating all these things and everything into one, so that you can clearly understand what is actually going on when you analyze charts. So you don't in my later video. So um, just subscribe and click the notification bell so that when I upload that video, you will get to know.